Thank you once again for watching this series of videos, and welcome once again to Augwood Forex Captured Trading Signals video 8. I'm so grateful for following me in all this series of videos, right from video 1 up to 8. And if you have not watched it yet, I want to encourage you. You'll be amazed what you see right from video 1 to video 8. I'm doing these videos mainly for you to understand what Forex trading is about, and also for you to take the advantage to learn how to trade Forex professionally and do this on your own and develop yourself to do it perfectly well, because this is a lifetime career that if you take your time and learn, you'll be amazed what you can do with it. Just give it a time. Don't be in a haste. Give yourself some time and keep practicing this as a part-time business on your own, and you'll be able to build a powerful career for yourself. So as I'm about to take you through video 8, which happened to be the last video in the series of the Augwood Forex Captured Trading Signals, we are purely signal providers. That means if you want some of our signals, when you contact us, we'll be able to explain to you how our signal works and how you can benefit also from our signals. And also if you want to learn, this is an advantage for you to learn and manage your own funds. Don't just allow other people to manage your funds for you. You can manage it yourself. And if you want professionals to manage it for you also, you can go ahead and do that. But it will be nice and good on your side for you to know what Forex trading is about before giving your money to a professional trader to manage for you, so that the outcome you'll be able to understand that this is what the whole thing is about. So Forex trading is a great career and it's wonderful, and some of us, by God's grace, we are enjoying it, and we want you to enjoy it with us. And this series of videos is an appreciation to how far God has helped me to acquire all this knowledge, and I'm making it available for you to watch and understand and see if you can also exploit this area of business, which is about the global financial market. The flyer before you is my first video that I released, and it's so wonderful. The content, 1 talks about the broker's trading software, 2 how to open and close trade, 3 how to save a trading account statement, 4 samples of captured trading signals, and then 5 risk and reward ratio in Forex trading. You can get this video at our website or at YouTube. When you search for Augwood Forex at YouTube, you will get access to this video. Right away, let's go into our fundamental analysis for video 8, and this is the fundamental calendar. You get this fundamental calendar from the Forex Factory site, and when you type you type in www.forexfactory.com, you'll get access to this fundamental calendar that tells you all the economic data that they're about to release for the day. This is Thursday, November on the 7th, 2013, and these are the news, the upcoming news, and these are the news that they have released. And I have captured the 12:45 p.m. Euro minimum bid rate, which is the 12:45 GMT, and this is the Euro minimum bid rate, which means that their interest rate, information concerning their interest rate, and on the 7th of November happened to be the day they cut their interest rate from 0.5 to 0.25. And I want you to see how the market reacted to these cuts. And this is how the market reacted when the euro released their minimum bid rate report, and they've cut their interest rate by 0.25. And as a trader, you should be able to understand what it means to you for a currency to cut its interest rate. Is a serious issue, and I want you to see how the market reacted to it, so that subsequently, as a trader, when you are trading and you meet a report that a nation has cut his interest rate, that is a tradable currency pair, you know what is expected. Here, let's assume I enter a trade for a buy because my signal gave me a signal for a buy, for a sell. Sorry. Let's assume I didn't know that they are going to release this minimum bid report on the euro. I trade because I'm a technical trader, I look at the chart, check my support, resistance zones, check my trend lines, check my candlesticks, and also my moving average. These 4 things for me to be able to predict what the market likely is going to go. So let's assume I place my trade and I place my stop loss. Now this is the time they've released the news. Look at how the market is reacting to it. This is wonderful. This is beautiful. This is what the market can do at times. Yes, because the market is very sensitive to these economic data, and as a trader you must watch out for this kind of data, even if you are a technical trader, so that anytime at all they are about to release this report that you don't know the detail, the only thing is that just go ahead, trade your technical, but tighten your stop loss, so that when it goes against you, you can easily exit with the smallest loss. Now look at this, my trade that I placed. It's just 35 pips, but I'm looking at making close to 200 pips if possible. Why? Because the news has the tendency of moving volatile. It is a volatile news that it can move more, but I need to tighten my stop loss so that I can enjoy it, so that when it knocks me out, it's a fair game, I stay away. But if it moves in my favor, why not? Let me take the maximum from the market. So let's assume this is how I take this trade. So can you see how the market is reacting to this particular news? Look at it just in 1 hour. Look at the move, and currently the price is around this is it. This might take profit around 200 pips away, and look at it. It has. So now let's go to our technical analysis, knowing what the market can do. As a technical trader, we come back to our technical trading approach. Now this is the pound USD currency pair. We had support line buy signal on 4th of November 2013, pound USD. This is a missed trade. I missed this trade. Now this is it. You can see the trade dropped to this point, and I draw my support line, and I was watching it for a pullback, for a bounce, and truly the market bounces nicely, but I wasn't there to enjoy this particular trading signal. That's to tell you that it's not all the signal. You cannot enjoy 100% signals that are available in the market. There will be 1 or 2 missed. If you miss it, don't force yourself to join it, because you will want to enter in at a wrong place, and that can cause you to make a loss. So as soon as where you're supposed to enter the trade and you've missed it, why not stay away and wait for other setup also? Because in the forex market there are a lot of trading opportunities for you to take. So once in a while there can be a missed opportunity to make some cool pips. Now this is the next signal. This is moving average sell signal on the 8th of November 2013 on pound USD. It made 189 pips in 4 days. After I missed this buy signal, I now succeeded the sell signal on the 8th of November, and that gave me 189 pips. This is what forex trading is about. You miss an opportunity, you can get another opportunity to make some money to replace that missed opportunity. So you have to be flexible in trading forex. Now this is another signal, the support line buy signal on the 13th of November 2013 on pound USD. This is also a missed signal. Now I draw the support line watching it, and yet I had a missed opportunity. Yes, it's possible to still mark it down. So as a trader, you need to be vigilant and know when, because I'm a long-term trader, I'm not always by the platform, I'm doing other things. So it's possible I'll be having series of missed trade, but I can assure you, with this approach, I am sure of making whatever is due me before the month ends. So this is it. So this particular signal, though I mark everything down, yet I had it as a missed opportunity, and it's wonderful. This opportunity has a tendency of giving almost 150 pips in 2 days. That's great. Now let's go to other signals also. Now Fibonacci and resistance sell signal on the 19th of November 2013 on pound USD, that made a loss of minus 75 pips in 3 days. So after I had a missed trade, I now had a signal for a sell here, and I took this sell, and this sell made a loss of minus 75 pips in 3 days. This is the importance of stop loss. Don't guess that you can win every trade in the market, so make use of your stop loss. Know where always your stop loss supposed to be and stick to it, and as it knocks you out, you calmly exit. Whether you are there or not, your stop loss does that job for you. Let's go to other signals. Now this trend line and support buy signal on the 6th of November 2013 on the Euro JPY, that made 54 pips in 2 days. Now this is it. This is my support line. This is my trend line also that I've drawn down, and I got a very nice confirmation here for a buy, and I took it, and it made 54 pips in 2 days. Now after 54 pips trade, I had a signal for a moving average and support buy signal on the 8th of November 2013 on the Euro JPY. This is also a missed trade. This is also a missed opportunity, but this missed opportunity, I don't have any justification to it because everything was clear for me to take it, and this is it. This is how forex trading is. You are not a machine, you are a human being. Automatically you cannot take every opportunity. There'll be some you will want to let it go because I was looking for a sell more, but this was a perfect signal for a buy that I'm supposed to be in it and enjoy it, but I had it as a missed opportunity. But let's look at the analysis around it. This is it. This is a moving average. This is a powerful buy signal moving average, and also there was a support line also there. So you have two things to confirm this buy. This is a detail of the support line 1, and this is a detail of support line 2, and this is my entry for the buy, and that's great. This is how forex trading is. This happened when they release their minimum bid rate on the 7th of November. This is how the Euro JPY traded it, the market fell seriously to hit. After the market fell, it gave me the opportunity to now buy, and I missed it. Now this is the next signal also. This moving average and resistant sell signal on 13th of November 2013 on Euro JPY, that made a loss of minus 44 pips in 2 days. So after I missed the opportunity and it bought, I had a signal here, a sharp signal here for a sell, but the sell couldn't hold, and I made a loss of minus 44 pips in 2 days, which means that I entered the trade. It took 2 days to stop me out. Now let's look at another one also. This trend line and resistance sell signal on 18th of November 2013 and the Euro JPY, that also made another loss of minus 74 pips in 3 days. That's to tell you that the market condition has now changed, and all the support and resistance are not responding powerfully to the prevailing condition, because that means there's a prevailing condition that has making the market to move in this direction. So look at it, this resistance line 1 and 2, and also there's a trend line also here, and yet the sell signal couldn't hold. So this is it. So this trade also made a loss of minus 74 pips in 3 days. Now this is very important. There is very important truth in the forex market that you need to appreciate. There are times that the market moves perfectly, every condition is perfect, and you see that all your signals will be responding to technical analysis throughout, and you'll be making profit. That is it. And there are times that the market becomes volatile, that most of the technical signals doesn't hold. So we have that condition, and we have the volatile condition. So it doesn't mean that you make so much profit last month, therefore this month also you are guaranteed to make so much profit. No, it doesn't work like that. This is forex trading. Month to month, every month the market condition is different from other subsequent months. So don't think that month A I made so much pips, therefore it's a guarantee for me to make so much pips in the following month. No, in the forex market it doesn't work like that. But when the opportunity is there, you take it, and when the opportunity is not there, you make the fewest profit you can make. Is part of the forex trading. So look at this. On the pound USD, I had 4 trading signals. If I had paid serious attention to all my signals without looking at side and side, I would have made better returns. This missed opportunity that went almost 120 pips, I would have taken it. But I had it as a missed trade, and then the second trade gave me 189 pips profit. The third trade also is a missed trade, that was a potential of 150 pips move that I missed. Then the fourth trade made a loss of 75 pips. And this on the Euro JPY also, the first signal made 54 pips in 2 days. The second signal made a loss of is a missed opportunity, and this missed opportunity has a potential of giving 200 pips in 3 days. And also the third trade made a loss of minus 44 pips in 2 days, and also the fourth trade also made a loss of minus 74 pips in 3 days. So in summary, we had this is the summary that is before us. So 3 weeks of trading, we made a total of 50 pips. Is possible. That is it. And I'm even grateful because I didn't made a loss, but I made some pips profit. This is it. So let's look at the total summary. So if you watch from video 1 to video 8, you can see how the trend is. In video 1, there was a profit of 680 pips recorded. In video 2, there was 685 pips recorded. In video 3, there was 644 pips recorded. In video 4, there was 389 pips recorded. And in video 5, there was 532 pips recorded. And also in video 6, there was 497 pips recorded. And in video 7, there was 317 pips recorded. And now in video 8, there was 50 pips recorded in video 8. This is it. This is how our forex trading picture looks like. So in all, this is how the money management table stands. In 18 weeks of trading, we had a total accumulated pips of 3,794 pips in 18 weeks, which is equivalent to 4 months of trading. And this is wonderful. This is great. So in trading, you don't guarantee yourself, because in the first 3 weeks I made 600 and something pips, therefore the following is supposed to be like that. No, the market condition at times changes. But if the market condition is perfect, why not make so much you can make, so that when the market condition is not favorable, you can balance yourself with it. So let's look at the money management approach. With these accumulated pips, from Augwood Forex money management point of view, we will advise our clients and our subscribers to stick to 1% initial trading approach, so that you raise your lot size to 1.5% based on the profit you've accumulated. So you'll be moving your lot size forward as you are building profit. You don't right away start with 5% per trade just because you want to make profit at all costs. When you start with 5% per trade and you made 1, 2, 3 losses, you have eaten heavily into your capital. That can trigger your emotions, and from that time going, you will have difficulties trading, because you are now thinking of how to recover before thinking of profit. So we advise, why not trade with 1% initial, or possibly lower than that, depending on the volume of your capital. If the volume of your capital is heavier, we advise you go lower than even the 1%. But we are using $10,000 as an example, as an ideal example for Augwood Forex money management approach. So let's assume it's $10,000 account you are about to start trading with as the first attempt. Why not start with 1% per trade, so that if you're able to make, let's assume you make 680 pips, then because you have now made about 6 to 7% initially, you can now move to 1.5% risk. Then whatever you make, also if you're able to make some pips, then you can now move forward. So let's assume with 1% you make 680, 1.5% you make 685. So you are climbing, you are raising your lot size based on the profit you are building. So this is it. From 2% you now move to 2.5%, then you move to 3%, you move to 4%, and now you now move to the 5% you initially want to be trading this account with. So you can now subsequently, all other trades can now remain at the 5% level, which is very, very powerful for you to make so much from it. So this is Augwood Forex trading money management approach. So after 18 weeks of Augwood Forex captured trading signals, we made 3,794 pips in 18 weeks, which represent 4 months of trading. Thank you very much once again. My name is Augustine Ketoglo. We are a group of forex traders trying to use this medium to create awareness for forex trading, especially in Ghana and beyond. So if you need our service, you can contact us at our website www.augwood.com augwoodforex.com and learn how to trade Forex professionally. Thank you very much, and God bless you for listening.